Hello and welcome back to the Rekt Capital channel. Welcome to today's video about the coronavirus and its impact on Bitcoin and the global economy at large. I hope you're having a fantastic day today, and let's dive right into the video. This is a chart that I shared in yesterday's video when we were talking about the growth curves for the growth rate of the coronavirus in the world. And if we just look at this data, this was from March 13th. And if we look at, for instance, Italy's example right over here, we're seeing that Italy is around the 33% daily increase in confirmed new cases of the coronavirus. But we have new data from yesterday, and because of the extreme measures that Italy is taking with self-quarantining and whatnot, we're already seeing a drastic decline from the 33% daily increase rate. So Italy is already on the decline, which is great news. So is Iran, if we just juxtapose that with the previous chart right over here. Iran was above the 33% daily increase rate, but now we're seeing a decline in Iran's growth rate as well. So we're already seeing drastic measures being taken in different countries, and we're already seeing a slowing in the growth rate of new confirmed cases. And this is fantastic news because this is what we're all about. We're looking to flatten the exponential curve. But the bad news here is for countries like the UK. So this is data from a couple of days ago. The UK is on an exponential growth rate curve. But of course, the new data even shows that this exponentiality is increasing for the UK, which is really bad in of itself. But the good news is that some countries are slowing in their growth rate. For instance, the US right over here, they are slowing in the exponentiality of their curve. If we compare it to a few days ago, then this was the exponentiality that's very clear to see, but we are seeing a slowing down now in the US. And the US are banning travel from all over the world, so that is a very positive sign for the growth rate. But of course, we have to bear in mind that most of these growth rate curves for new confirmed cases in the coronavirus, this is impacting Bitcoin's price and the global economy, as we'll talk in a bit more detail in just a moment. But the thing to mention here is that all of these curves are still exponential. Only South Korea, really, alongside Singapore and Hong Kong, and maybe even Japan, these are the countries that have slowed the growth rate, and they are now entering a logistic curve. And this is something I was talking about yesterday, the difference between an exponential curve and a logistic curve in yesterday's video. The exponential curve is what we're seeing in most countries, but we're looking for a logistic curve. We're looking for that slowing in the growth of the coronavirus and new confirmed cases. And South Korea has been able to achieve this slowing in the growth by mass testing and quarantine. Singapore as well, strict quarantine rules and contact tracing. They were tracing each confirmed case and just trying to lock down those people and quarantine them just so that they don't infect people, new people. And similarly with Hong Kong, school closures and quarantine, strong community response, and you have to act very quickly. There is no room for perfection. There isn't going to be a perfect response, but the most important thing is to have a speedy response. And this is what we're seeing in South Korea, Singapore and Hong Kong. Japan doesn't necessarily have enough data to see whether we're actually seeing a slowdown. But in any case, we are seeing that South Korea, Singapore and Hong Kong are seeing drastic declines in new cases, which is the logistic curve. And if we just juxtapose this very quickly with an exponential curve, then this is of course what we're looking for. We're looking for the inflection point. So the point at which this exponential curve turns into a logistic curve. And the way that an exponential curve turns into a logistic curve, it has to go through its inflection point where the amount of new cases growing slow down, and they actually remain constant for a while. They remain constant for a little while before proceeding that slowing down in the progress of that curve. And if we just cycle back to South Korea's growth curve, this is the light blue one here. We have a constant growth. Of course, it starts with an exponential growth right here, an exponential growth, but then we have constant growth on a daily basis, but then this constant growth precedes a slowing down in new cases and then stability. And this is the key. This is the key, that we need to flatten that curve worldwide. And only a few countries are doing that, but they're also showing us. Italy, South Korea, Singapore, Hong Kong, they're all showing us what needs to be done in order to slow this curve, in order to change the exponential curve here in red to a yellow logistic curve. And what they're showing here is that we have to quarantine people. And part of this quarantining is in fact social distancing. And this is an interesting chart right over here, a model which showcases to us that it's very important that more people take on the social distancing approach, minimizing close contact with people, with their significant others, minimizing travel, minimizing crowded areas and public places where the spread of infection can actually easily be spread to other people for new cases. And I'm going to discuss this model in a bit more detail, but I just want to illustrate to you why it's important, because we have high risk individuals and we have low risk individuals. Because after all, if we just look at the COVID death rate, of course you can see that this is not the flu. This is something we spoke about in a previous video, but you can see that the high risk individuals are the people over 60. And at the same time, we also have to bear in mind that the people over 40 even still have a high death rate. There are still many serious cases in the people over 40, but let's just say that high risk individuals are the elderly, they are the people over 60, and these are the people we have to protect, because young people don't have a high death rate, not really at least. But the thing is, once they get contracted with the infection, they have very mild symptoms to the point that you don't even know that you're infecting other people, and other people could be people that are at really high risk. Which is why it's so important, because of course, proactive measures by high-risk individuals, such as elderly people staying at home, quarantining themselves, this, of course, will minimize the number of infected cases. It will minimize the number of infected cases, but you can see here that there is a greater impact in containing the amount of infected cases, in containing the spread, if proactive measures are taken by only low-risk individuals. Because low-risk individuals are more common in society, according to this model, than high-risk individuals. So if high-risk individuals are self-quarantining, but low-risk individuals, such as young people, aren't doing anything and they're actually still going to public places, this isn't really a desired effect. So it's very important that low-risk individuals practice social distancing. And the best way to minimize the amount of infected cases is if both high-risk and low-risk individuals take on protective measures. And it's very important that these low-risk individuals start to practice social distancing, because like we spoke about, if we look at the critical care infrastructure here in Europe, you can notice that the European average is around this level. So that's 12 critical care units, care beds per 100,000 people in the population. You can see that around 60% of European countries are below the average, and this is a frightening statistic. So it's very important to just practice social distancing before we impose a tremendous pressure on the public healthcare system that they will have to start choosing who dies and who doesn't, which is a frightening thing to bear in mind. And this is a very good illustration for social distancing, that we need to increase the distance between the healthy people and the infected people. We have to increase that distance. And talking about those high risk and low risk individuals, let's just say that the low risk individuals are the red matches and the high risk individuals are the green matches. And let's assume that we're going to move these two high risk matches, high risk people away from the flame. The low risk people still catch fire very easily because of COVID. It's very highly infectious. So if we just take away these matches, all of these people are still getting infected, and it's very easy to start to infect other smaller groups of high risk individuals. So it's so important to practice social distancing. And it's this social distancing that will actually influence the inflection point. This is what needs to be done for that inflection point to occur. And we've seen this in South Korea, Singapore, Hong Kong. This is what needs to be done in order to reduce and mitigate the spread of the coronavirus. Because what we're seeing now is that the coronavirus is being a catalyst for a recession. And if you just look at the Airbnb bookings, we're seeing a massive plunge across all these different industries, whether tech or even if we're just going to look at oil, like we're going to do in just a second. You can see that if we just compare Rome, we have 40,000 bookings, roughly speaking, but now over time, from January to March, we've seen almost a 50% drop in the Airbnb bookings. So this is really adversely impacting these businesses. We're seeing a decline, massive decline from 40,000 to almost zero in Beijing. And you can see how drastic this effect is on these different businesses. Hotels and travel stocks are no different. We're seeing a consistent decline in all of these different hotels and travel stocks like Starwood, Hilton, Expedia. We're seeing a drastic decline ever since the beginning of February. So we are seeing a drastic effect worldwide on all of these different businesses. But we're also seeing a drastic effect on the psychology of people. If we just consider this Maslow's hierarchy of needs, you can see that base needs, because of this virus, base needs are being threatened. And this is why we're seeing extreme fear, which precedes extreme behavior, such as stockpiling and self-quarantining. So people are fearing for their health and safety. They're fearing for physiological needs, such as food, access to food, and access to water. They are fearing for their base needs. So if we consider Bitcoin's price or even stocks and the stock market in general, we have to understand that until people's needs are being satisfied and people feel safe and feel secure when it comes to their base needs, it's only then that they will be open to self-actualization, which investing actually concerns. Because after all, there are people who are selling their investments. They want to have that emergency cash buffer just in case, so that they can better deal with this pandemic. So they're going to be selling their stocks. They're going to be selling their investments. They're going to be selling Bitcoin, like we're seeing. And we're seeing all these crashes across traditional markets and the cryptocurrency market because people are strapped for cash. They want to have that cash buffer. And this is already influencing, if we just have a look at the coronavirus outbreaks, how they've sunk China's hybrid and battery-powered car sales, you can see how we're seeing a drastic decline. So people are no longer buying luxury goods because that's something they can go without. When people's needs are being threatened, their fundamental needs are being threatened, they're not going to be looking for investments, they're not going to be looking for luxury cars. That's something they can do without, and this is exactly something that this graph suggests. And this is exactly the same thing with the coronavirus and its correlation to Bitcoin's price. So Bitcoin's price here is in gray, and the coronavirus mentions just keywords. People are searching this on social medias and on Google. People want to know more about this virus, and they're looking for more information about it. So every time we see coronavirus mentions of its keyword, we can see an inverse relationship between Bitcoin's price action, and every time we see an increase in the mentions, we see a decline in Bitcoin's price action. And this is just all about uncertainty and fear increasing every time the mentions go up. And of course, Bitcoin's price is going down because people don't want uncertainty. They actually want cash. They don't want an investment that is speculative, high risk, and volatile. And the same correlation goes for the recession. So you can see how the coronavirus and the keyword recession are inversely correlated with Bitcoin's price action. And as long as we have this coronavirus, then we're going to continue seeing fears of the beginning of a recession, and coronavirus don't bode well for Bitcoin's price action. But coronavirus mentions don't bode well for the S&P 500 either. We've seen that S&P 500 has had the biggest one-day drop since Black Monday, and Black Monday was in October of 1987, and here we have March 2020. Look at that. That is the second one-day drop since Black Monday. Of course, if you just look at the third and fourth and fifth place, this was during the financial crisis. So what does that say about the health of the global market? We might be very well on the cusp of a recession, and it's this coronavirus that's being part of a negative catalyst that is spurring the beginning of this recession, which has been a long time coming, to be honest. And if that isn't evidence that is strong enough, you can see that US stock valuations slide below the 10-year average, this being the 10-year average right over here. And this 10-year average has pretty much been broken down significantly in terms of the S&P 500 forward price earnings ratio. So not good news when it comes to the global economy. Bitcoin is also struggling. As long as these fears of the coronavirus persist, people will fear for their physiological and safety needs, their most basic needs, and people and businesses alike are going to struggle. People aren't consuming as much. They don't want to buy luxury goods that they don't need right now. They want to protect themselves. They want to protect their wealth rather than grow it and spend it above all else. And I'm sorry to have left this video on a negative note, but the only saving grace here, at least in the short term, is that the Federal Reserve, is going to inject $1.5 trillion to prevent this disruption in the market. And I'm just wondering whether this is going to stave off a recession, what that effect will be. But in the short term, once we have that injection into the markets, that could stave off a recession a bit longer. And judging by these correlations that we have with the recession to Bitcoin and the coronavirus to Bitcoin, once we see this injection, we'll probably see Bitcoin recover a bit as well alongside the markets. So that's not a bad thing for Bitcoin investors as well as investors in the stock market. But it's the question that we need to ask ourselves: how long will this recession be able to be staved off after this injection of capital into those markets? Having said that, that's about it for today's video. If you've enjoyed this video, please consider dropping a like, and of course subscribe for more videos like this in the future. I'm more than happy to be pumping out this content on a daily basis for your enjoyment and also for you to find value in it. And if you found value in it, please consider dropping a like, subscribe for more videos like this in the future. I'm Rekt Capital, and I'll speak to you very soon. See you in the next one.